GM everyone, and welcome to Smart Contact, an interview series with the world's most influential and impactful Web3 leaders. This podcast is produced by Web3 Harbour and is supported by Circle. Like and subscribe for more Smart Contacts.
Welcome to another episode of Smart Contact produced by Web3 Harbour. I'm Karena Belin, co-founder of WHub, member of Web3 Harbour's advisory committee, and I'm your host today. We're recording with a live audience, and today's Smart Contact is Alan Ng, co-founder and CEO of Everest Ventures Group. Thank you for joining our conversation today.
Thank you for having me.
Great to have you here in Hong Kong with us, Alan. So we'll run through a few key themes and unpack things like cross-regional and informed investors communities. How do you make institutional grade analytical capabilities democratic and more accessible? Going to talk about IPOs and if there are truly a legitimate pathway for scaling and capital raising even in the Web3 industry. And also in terms of bridging Middle East and APAC capital markets. But as you know, I love to start my fireside chats with a bold statement. And I would like to invite you to give us your prediction and bold statement about the Web3 industry.
Yeah, I think my bold statement is that we're entering the second half of the industry. And while on one hand, the industry is getting legitimized right now, which is a blessing, the curse is going to get a lot rougher as well. And the competition is going to be a lot harder. So if you want to stay in the industry, you better bring your A game.
Wonderful. Our conversation will lead up to that statement. But before we dive into it, I'd really love to tell the story about your own why. And I would like to invite you to give us a little bit more background about Alan. What I digged up in some of your really impressive resumes, you have over a decade of experience, right, in the tech and culture scene, invested and participated in over 100 startups, 15 plus unicorns. You have been an entrepreneur, investor, and you really have traveled the world. So you are at home, US, China, rest of the world. Tell us a little bit about how does that all fit together?
Yeah. By the way, I guess many of you will wonder, I'm 34 years old, just put it out of the way. I started my career doing startups in college, pretty lucky. So technology is pretty much my career, from the early days of doing Web2 startups to switching to investing in TMTs to now, for the last 7 years building in Web3. Culture is my passion. So I invest a lot in culture business. I just actually came back from Korea, closing another deal in a K-pop company. I've been investing in movies. I did a lot of other stuff in culture generally. That's pretty much about me, I would say. I'm a father of 3 kids. So there's not really like a work-life balance. My day looks like 30, 40 travels a year for the last 12 years. And pretty much just work every day and then spend maybe Sunday with kids. Yeah.
So with this, tell us a little bit more. When did you start getting exposure to the Web3 industry and what actually excited you? Why did you decide this is the place I want to work and drive forward?
I hope there's a more beautiful story to it, but the real story is I just hated my job in private equity back then. So at the time I wanted to leave and I was like, you know what, I should try to create a perfect job for myself. So that was the selfish reason for it. And Web3 has a couple of those characteristics, actually, if you think about them. It's very rebellious industry, especially back then, imagine in 2016, 17, 18. It's a pretty rebellious industry. It's very, very early, so, there's a little bit of chaos as well. But, in Chinese wisdom, we say, when there's chaos, there's opportunity, right? In Chinese phrase called 浑水摸鱼, right? If the water is too clear, there's no fish, right? And third is just like, it's a very global and borderless industry, which is frankly very, very rare because if you look at a lot of other industry, it's very much tied to the local scenes and what you have as opportunity, and it is not necessarily like Web2 where you could, for example, be a company in Hong Kong or Asia and work on, have users across maybe 20 different countries and work on global opportunities. So at the time it was very, very obvious to me that Web3 is that thing, and plus I'm not smart enough for biotech or other stuff. So that's how I really got started in Web3. Yeah.
Is there maybe one special event that you can pinpoint? And I just we talked about that previously. And obviously, I think a lot of hubs will try to claim that they have been like really early adopters and in the space. But I remember, I think it was 2017, right? That famous dinner at the AMC where Mick from Dapper Labs came over and explained that Web3 will go mainstream thanks to breeding kitties on the blockchain. Was it at that point in time? Tell us really what sparked you and what was it? This is it. I'm going to double down.
Yeah. So that's the dinner we did back in, I believe it's like December 2017 or early 2018 when Mick, who's a good friend of ours, and came over to Hong Kong at the time, like CryptoKitty just kind of become the first use case on Ethereum, and then yet host a dinner in AMC. So we all went over to see him. But my journey actually started a little bit, I would say slightly earlier in late 2016. So when I was covering TMT in my private group, my second largest market is Israel. So I go to Israel a lot, like, probably 30 times in my career. And as anyone that go to Israel enough, you got FOMO by our friends into deals you're not supposed to do, because they're really, really good at, selling, pitching you. And so the deal that I end up doing is this Genesis block of a project called Bancor back in the days. And I have absolutely no idea what that white paper is about. I have absolutely no idea what she's talking about, like decentralized pool of liquidity and etc. Now, actually looking back, that might be the first DeFi project of the industry actually created. But Gail is a very impressive female entrepreneur. If you saw her very famous TikTok, "What is blockchain?" One of the most viewed TED Talk in the world. So I was like, I don't know what you're talking about, but what's the minimum? She said, there's no minimum. It's called Genesis block. So I wrote a check. And then about 4 months later, I was in San Francisco. My analyst called me in the midnight. I was like, wake up. He's like, go check out this website. It's now $38 million right now. I was like, what are you talking about? And then every 10 minutes it become like 5 million more. And then I remember I stayed like up probably until like 6 a.m. or something, and the number froze at $135 million or something. And it was actually later on I found out it's because it broke the entire Ethereum smart contract. So that would become a huge mega ICO at the time. So at the time I was like, this is absolutely fascinating. This is like a venture company in an idea stage, but then pretty much just IPO'd, right? And then with all this participant coming in. So I look at that, this is like something interesting there. And that 100K investment become $2 million. So at the time I called my boss because we wrote that check actually from the GP pool, because obviously the fund mandate-wise is not allowed for us to write a check. My compliance would never let me do it. So I was like, hey boss, like what do we do? It's $2 million here. He's like, yeah, it's just $2 million. Just keep writing those checks. So I wrote like 28 other checks. I guess like 2/3 of them are scams, and they never probably reply me anymore, or deleted my WeChat, deleted my email or something. But many other legendary names came out from it. So that's how I really got started. And around the same time when I met Meg with you, I just closed a $25 million investment on behalf of my former fund into Telegram. At the time, it's not called Ton, it's called Gram back in the days. And we were the biggest investor in the first round. But unfortunately, we lost like $8 million in that deal because SEC sacked that token issuance 3 weeks before they're about to list that token. So that's how I started.
See that makes it very, very sticky. So you stayed involved with Dapper Labs, and then also worked, I think, together with Animoca Brands, right, in building part of the portfolio investments, and all then fast forward to Everest Venture Group. So let's get back to our topic about the role that you want to play in bridging Web3 investments across the regions. So one thing, you said you are here to build smarter investor communities. Tell us a little bit more. What does that mean, smarter investor communities, and how?
I didn't come up with those words, but a lot of our product actually work towards the same product vision under EVG. So EVG is roughly about 250 people right now in terms of all our subsidiary combined. With multiple product, we got about 10 million, I would say, retail or consumer user or readers of our products. And one of the very first product we kind of helped build is called Block Temple. It's currently the biggest Chinese crypto media. It's headquartered in Taiwan. And from there, we also, host conferences like Asia Blockchain Summits and et cetera, et cetera. So, and then with other product like Aspen Digital, which is complete opposite of that, which is very institutional, serve only like about 1,000 users or client, but they are all the I would say ultra high net worth or family offices, of the world. And Aspen is a licensed platform headquartered in UAE, and then basically serve like names like Rothschilds, and you saw some from the public release like CP Group family, Shangri-La, etc., etc. So for example, in Hong Kong, in the top 100 counting families, about 40% are Aspen's client. So Aspen is on the very opposite side, but I would say they're doing pretty much the same thing, which is bringing a new asset class, explaining that to traditional cohort of client. And then obviously one of our very latest product, Agent, which is using AI to try to change the relationship about every individual. How do we actually profile and, catch up with the market, both stocks and crypto, is also working toward the same goal, really. So I think that's what we do. And obviously I think a lot of people know EVG for our events and parties, but we do host a lot of, from very institutional events to all the way, to very, very massive, I would say, parties in general. But that was also working towards the same goal as well, because I look at this like ultimately community is what this this industry is really about. And just going back to the early example of, regardless is CryptoKitties or the AMC dinner or the Bancorp deal and ICO, etc. This is all started with community, and I think that's one thing that would not change probably.
Yeah, I think that's really the interesting part. If people go and look into your LinkedIn profile and they see you talked about, Aspen Digital, you talked also about EdGen, and I want to go a little bit more deeper into that, even though if we risk to go a little bit on an AI tangent here. Then Digital Ascent, you just recently joined Canton as well. So it seems to be united all through that same mission and passion, right? Which is helping maybe the more traditional financial sector, and in that the investment and investor sector, to onboard to the Web3 industry. So tell us how do you go about telling people, investors, that they actually really don't know what they don't know? How do you tell them that, they really need specific insights, specific market access that you can provide? How does that work?
So one of our very core thinking is there is no such thing as perfect answer. A perfect answer highly depends on who are you talking to. So for example, you want to explain to, I assume a lot of you, worked in finance industry or trained in finance industry before. We are very used to being filled with numbers and matrices and different, acronyms of things and et cetera, et cetera. We like things sophisticated, but to explain this to my mom will be very, very different, right? Like if you try to explain what is, how is Ethereum, like my mom hit me up one day and say, how should I think about Ethereum versus Solana at midnight? And I'm like, maybe try to think of Ethereum more like the broader Christians, like with different chapters that all have different P&Ls, and think of Solana a little bit more like Vaticans, right? Like more Catholics, right? They're more hierarchical, like one P&L, one management, super teams and etc. And they elevate, you elect, And to my mom, that is a good answer. But if I try to go explain like, okay, POS, POW, like how actually details are being operated, modular, not modular, share security, then you really got lost in translation. And I saw the same thing across both our media product or Aspen. It's the same way for us to explain to a family that does primarily manufacturing. A lot of our clients are very, very traditional clients. They're not even that much into tech in general. So for them to really think about digital asset, need to be a lot cleaner in terms of thesis. For example, I would tell them, it's like, if you have 5% on your book in gold, you should have 1% in crypto. If you have 20% in Alibaba and Tencent or Tesla, you should maybe have 2% in Hyperliquid, in Ethereum, in Solana. If you have 15% in Millennium, Brevan Howard, and all these liquid funds, why not have 10% of that in crypto? Because crypto hedge funds, because it's not that really different. Just like, anybody, like we were all looking back in the day in venture deals, you do some in Southeast Asia, you do some in America, you do some in China. So just look at crypto as really is that extension. Don't really try to see it as a new thing. So for them, it's a good answer. But if that answer, being thrown at someone that's like, yeah, no, that's not a good answer, right? So the way you kind of really think about that is, you want to be on the right side of the things. And I think the right side of things is people these days are no longer really that interested in, if you think about most young people, they don't even want to trade stocks anymore, right? You look at TikTok, everyone is treating investing as a form of social expression. And if you look at the percentage of people doing self-directed investing, self-directed trading has really increased from like 12, for example, in America, increased from 12% about 12 years ago, 15 years ago, to now like 32, 33%. People are all trading as a form of expression versus back in the days, like, I'll allocate through maybe an RIA, even middle class or something. So I think it's like AI is going to play a very, very big role as well in here because, for example, the way we're going to build Agent as a product is Agent is basically your personal AI CIO at your fingertips. So you understand what you like, what's your profile, what kind of asset you own. And when you wake up in the morning, it will tell you, it's like, hey, remember that stock you and I chatted about last Thursday? The trading volume has doubled. Maybe something's going under the hood. You should come back and check it out. Remember, you followed this nuclear meme stock called Oklo. I found something slightly better for you. You should check this one out. And same as crypto as well, right? So we do kind of things like investing is going to go into this whole TikTok era. If you think about TikTok is a million different products for a million different people. My TikTok and your TikTok feed is going to be completely different. And we think investing, we think about asset classes in a very much the same way. And I think crypto is already moving towards that direction as well. It used to be just like one or very few assets, and now it's like you saw people kind of belong to different sub-community within this bigger asset class. So I think that's, as a media owner, as owner of Aspen who helps, family office allocates, or Agent, this AI product, that's the mission we're striving for, is trying to create this very personal journey to help people to kind of get into the asset class and explore what it is.
And do you indeed see it really democratizing? And one of the interests here of everybody on this joining into this podcast is really in terms of where is Web3 investments and investing going. So, I mean, let's be fair. There were eras where it was really an easy sell and FOMO really did exist. Now, what I hear from you say the diversification into different groups, ages, different levels of sophistication, you can clearly see that. And I was just wondering with Edgen, are you trying to ride the AI hype in terms of helping Web3 investment? So if I look into Edgen, and you can tell a little bit more about what exactly it is, but it's definitely, as you said, leveraging AI technology, leveraging, sentiment analysis in terms of helping making investment decisions, not only into Web3, by the way, but I do some categories like Donald Trump category, where I guess there would be some type of Web3 and crypto investments in there. Yeah, tell us. So AI hype needed to get more investment into Web3?
Like, as a technology builder, because majority of our firm are actually engineers. So most of the time I deal with geeks, basically. So we don't really kind of have this very definition of like we did, for example, every year, 200 smart contracts. But we also have an AI lab that builds a lot of, we build, for example, an Agent 3 proprietary model under the hood. And we build a lot of proprietary architecture of things. So we kind of like, it's like you're going to a kitchen. The way I kind of think about it is you can use 2A or 2B. People don't care as long as it's a good dish, right? And as long as the dish is delicious. And the way we kind of think about that is Web3 is going to actually come in the later part of Agent, where we believe in the future of the rails for agentic execution is going to be on blockchain. And I think there's no doubt in terms of doing that. And kind of, I think Web3 now is also becoming a little bit of like a finance 3.0 as well, to a certain degree as well. I think blockchain's most obvious use case at this point is going to rewrite how the infrastructure and the rails for finance industry. I think pretty much every layer of the stack will be reinvented, over the next period of time. If you look at, like, for example, Canton recently, they just have the DTCC just put their treasury, native treasury being executed on chain. And I think it's just like a mere beginning, and we're going to see like tokenized stocks and things like that. So I think that is going to come in the picture over a period of time that I think a lot of it's not just you can research about tokens or stocks, but you could also instantly execute on your token and stocks. The AI feeds you and kind of keep talking to you, using blockchain under the hood without you knowing about them. But obviously for the first part, what AI does brings is this things that blockchain would never able to bring, which is the understanding of you and the understanding of the world in a very precise context. So we basically build three unproprietary reasoning model. We build a lot of different agents, like with agents that does only macro analytics, like tracks basically bond issuance and, every single meeting minutes of the Federal Reserve governors and etc. We have technical analysis agent that probably draws a chart way faster and better than any human could possibly do. We have fundamental analysis that will break down entire P&L of NVIDIA and based on segment and gross margin and compare to comms and list out entire table that normally your analyst would take 3-4 hours to even scrap up something similar. All the way to insider agent that tracks if the CEO just sold $100 million shares in the market, or tokens, right? So, and one thing you mentioned about the social part, which is we also create an agent that basically we train them with everything Donald Trump has said, everything Arthur Hayes has posted on mediums or everything, and we even allow the agent to speak exactly like them, and so allow the user to basically, not everyone has a chance to hang out with Arthur, but now you have a chance to talk to Arthur based on his wisdom. So that was like pretty much what we're seeing, is that AI is this really interesting tool that is going to make a lot of impact, like science fiction great stuff that happens. And now if we kind of trying to throw on also blockchain for the seamless execution for the agent for the future, I think we're going to really see how entire finance industry got rewired. So that means Robinhood, like people has been excited about for many years, it's not really going to look that exciting, for the next 10 years or so.
Wonderful. And I mean, this is one tool and particular know-how that you bring into EVG's investment strategy and that access to the investors. But tell us a little bit more what are some of the tools or metrics that are really Web3 specific now that you on the EVG platform and group leverage? I mean, for example, like on-chain data or dashboards. What can the investor expect?
We use pretty much everything. So we subscribe to every portal you can name, Nancy Massari, Blockwork Data, Artemis, and especially because we're building agents. So we have agents connected to 130 APIs in the industries. And we probably pay, I don't know, a couple $100,000 a year based on that. And then, we try to use every single tool, as long as they're helpful. Obviously, I think as an individual investor, if this question is coming from more individual perspective, more platform or dashboard doesn't mean you have a better chance of making money in crypto. I actually think crypto is a very interesting market that it has fair participation, but it doesn't have fair chance to make profit, right? And I actually think that the chance to make profit sometime, I think even stock market actually is maybe a little bit fair, because at least you're going to there's like very strict rule of security rules where you got to actually put out disclaimers and, tell people what you're doing. If the founder sells stocks, you will be on the notice and everything. And crypto tend to be sometimes, chaotic, I would say. But I think what's really, really interesting is just make sure the best way is always trying to, like one way I would say as an individual, the best thing you can do is try to join these AMAs, right? Like joining AMAs is like a very quick way to see through if are they really doing what they actually are thinking, right? Because white paper, everybody could, not even an AI could wrote that. Back then you have a human writing, the advisory shop writing your paper. Now it's like probably all written by AI. But if you join this AMA, if you go to an event like this, you can have a pretty good vibe in probably like 10-15 minutes that should you put 200K, let's say if I'm a project founder and issue a token, should you put 200K with me or no? Does he look like a scammer? Or like, does he actually know anything about what he's talking about? So you can have a pretty good judgment through that. So I think this is kind of like pretty much applying like almost like a private equity or VC style due diligence on a public market instrument, right? Because public market usually just read annual reports. But then in VC and PE, we will actually go to visit office, we'll talk to the founder, we'll try to understand your operation. So I think you need to kind of apply that venture due diligence methodology maybe on a little bit of the public instruments, because after all this token you're holding or trading or bullish on are still Series A companies, right? Like they're really, really, really early companies. So there's still plenty of risk under the hood. Yeah.
Sorry to interrupt, but I want to tell you about our smart contract lead sponsor, Circle.
What is Circle?
At Circle, we're building a digital dollar that brings the power of the internet to money.
Circle's the place where crypto meets stability,
where local businesses meet global
and
customers.
the US dollar meets USDC.
Meet Circle.
Thank you to all of our sponsors and community partners. Now back to the conversation.
Part of that passion is indeed then also creating, as you would say, these collective or these communities, these well-informed communities. And I think if I understood you correctly, there's a strong passion on making that regional, cross-border. Tell us a little bit more. What is EVG doing to build these and accelerate these cross-regional communities?
If you look at like in the global landscape of crypto right now, obviously I think a lot of attention is on United States probably the last year or so because of the regulation, the elections and everything. It seems like it's the center of the universe, and I've been spending a lot of time, I would say last year and this year there. But let's also not forget this industry didn't start very, very global, right? For example, like I think Greater China, we have one of the biggest community. If you look at like 8 out of the top 10 exchanges, there's Chinese exchanges. And I was just in Korea. I actually landed like a few hours ago from Korea. We're shareholder and early investor of the biggest exchange in Korea. There's also a very vibrant community there, right? All the way from young people who feel like they don't have social mobility to the Ajumans, right? Basically like trading cryptos. And I think each community is often have a different way of viewing the market and different preferences, I would say. And I think that would explain a lot. For example, imagine there's a tool where we'll track the trading percentage of the same token across the Chinese exchanges versus the American exchanges versus the Korean exchanges and see what is actually driving the price action. And is the Korean Ajuman trading it or American or Chinese or whatever. But I think one thing that we've been always trying to do is we try to see this not as a separate community and things. We try to see them all as one. And we do believe, for example, like every year we publish projects. So our relationship with, for example, you mentioned Sandbox and many of those, we started as publishers initially. So we published this product. We were the publisher of Deprolab into Asia as well, helping them to take them to many markets. You mentioned Canton, which we currently helping them to publish into Asia and doing a lot of work with them. Last year, we helped the Pudgy Penguin in terms of on the publishing side. And one thing we did is we tried to adopt a different approach for different local markets. And try to engage local research firms and very local language, I would say in general. And I think that is if you're really trying to make sure your project goes global, that is something steps you cannot skip. Yeah.
And how would you characterize the different geographies? Is it fair to label specific areas like, I don't know, Middle East, that's where the money is coming from, APAC, that's where the sophistication in terms of innovation is coming from? I mean, how would you inform, particularly also, the founders and builders in the room about accessing these different markets? Yeah,
I mean, reality is, if you think about like regulations or institutional adoption, nobody really care that much about East compared to US, right? Like US is the elephant in the room, is the heavyweight there. So everyone cares what's going on in DC, everyone cares what's going on Wall Street. And those are the things that's going to shape. And if they move, other regulators going to move in line. When you see BlackRock and Wall Street firms taking actions, of course, a firm in Hong Kong is going to take actions, right? So I think institutional adoption is very, very West-leaning at the current moment. Retail adoption and consumer adoption, what we are seeing is opposite of that. It's very, very East-leaning and East-centric. As I mentioned, out of the top 10 exchanges, you can pretty much see the retail flows. Kraken and Coinbase, despite a great partner of ours, we host a lot of events and do a lot of things with both of them. We're investor in Kraken, but their flows is not as vibrant, nearly as vibrant as the Chinese or Korean exchanges in general. So I think consumer adoption that you're overall seeing and consumer developers is mostly, I would say, coming from Asia. And I think Middle East is this new interesting third party or in this triangle, this relationship where I think Middle East basically benefited a lot, like in the last 3 to 5 years, not just in crypto, but as a neutral state in this very polarized political world, where you saw basically after Boris Johnson stood himself in the feet and kicked himself out of the Europe, every single billionaires in London is trying to basically move down to UAE. And to become the neutral state, basically a lot of people want to go to. And one thing great about, if you look at countries like UAE or Saudi, the interesting thing is they never had a secondary economy. So they basically jumped from primary economy, which is drill, baby, drill, all the way to, hey, let's have financial services and tourism and Dubai and all these things. And so that means for them, their commitment to basically embrace attracting capital to, make sure there's more transaction flows and etc. is more determined than any other country. Because you can think of like, for example, for China or Korea or Japan, we still largely, or America, we still largely rely on secondary economy to provide jobs. Because that provide way more jobs than just like, a couple of people trying to do capital activities. So I think UAE, you saw UAE, you see Saudi, you see some of the Qatar, you see some of these countries making a lot of effort and progress in that. Obviously, everyone is thinking that, we're going to go there because they've, first of all, more relaxed regulation. Second, they're rich, right? The key is one thing that they're rich, and second thing, you can tap their pocket, right?
Is it accessible? Yeah.
Exactly. So I think that is something that a lot of people is trying to work on. Animal did a great job, going to Saudi. I think every firm is taking a slightly different approach. But I think overall, Middle East is becoming this very, very important region because if this U.S. and China tension continues basically in the world stage, I think Middle East is going to become that third leg in the world politics and economy. And that's why ever since I make my first trip 4 years ago, ever since then probably make 20, 30 trips. We've now have 6 licenses in UAE. We've set our office there with 15 full-time employees. We host the Digital Asset Summit with the Abu Dhabi government this year in the government building. So yeah, we're making a lot of commitment, really moving the headquarters, for example, for Aspen from Hong Kong all the way to there. So we're making those efforts, but I think there's a bigger game plan here than just trying to draw short-term liquidity, because you can get an investment or you can get something. But you can, if you're a great company, you can also get it somewhere else. What I'm really seeing is that neutrality of the region is what really makes it really special.
Yeah, and then Hong Kong in the equation. How competitive is Hong Kong, and what's missing to make it even more competitive?
Yeah, I have a slightly different take about Hong Kong, I think, than a lot of people. One of my very close friend and big brother is Duncan, our senator that represents us in the technology sector and also does a lot in the crypto legislation. The way I kind of really think about Hong Kong is, I would similarly, if we try to just like keep it real for a second, Hong Kong, in terms of ability to create financial innovation, or in terms of like, are we the leading figure compared to like New York City or US? Like, nah, we're not going to become them. And people are not going to really care that much about what we do here. They're not going to see us as the example or pioneers or things. We're going to always be the followers that are reacting to, for example, America is Circle doing well. Okay, let's do some stablecoin bill, right? And Duncan really tried. I think he tried his best. There's some limitation in the bill and etc. But I think what Hong Kong is really special, let's not forget that Hong Kong is basically a second gen kid with a silver spoon in the mouth, and our mother is called China. It used to be called Britain, and now it's called China. And we have one of the biggest pool of talents in the world. And that's why we're headquartered in Hong Kong, because we have over 160 engineers in China across 4 cities, right? All the way from Hangzhou to Shenzhen to Xi'an to Chengdu. It's a unique pool of resources that an arbitrage that I think a lot of other places you would not be possible to tap. And let me give you a very clear figure to compare this, right? So for example, in America, if you try to hire somebody, an engineer with, let's say, 8 to 10 year experience from a fan-grade company like, Netflix, Facebook, Apple, etc., it's probably going to cost you about 400, 500K US dollar a year on the base, and plus maybe like $250,000 on top in terms of ESOP. And then you got to top up like refresher in year 2 and things like that. And they remote for 2 days. In China, like half of my team is from Tencent, Alibaba, TikTok, JD, all these companies. The CTO is 14 years in Alibaba and financials. They got paid probably like 100K a year in base, 120K, 150K in that range. So basically you're paying 1/3 of the price compared to Silicon Valley, but exactly the same quality. I would argue anytime with anybody that an engineer with 10-year experience at Alibaba is exactly as capable as a guy with 10 years in Amazon. but you're paying 1/3 of the price. And what it means is you can iterate your product 3 times faster. And I think that is the really the amazing thing about a builder or as an investor in general is you de-risk yourself from day one if you have this team set up. Basically, you can think of it in certain ways that you can make superior quality products using the supply chain here, but unlike traditional product where you're gonna get tax on, tariff, in crypto, you can export it to any place in the world without having to think about, all these barriers. And I think that is the huge advantage of, I think, Hong Kong in general is we have this very superior pool of technical talents. And it's also a very highly financialized city with a lot of people trained in finance industry before. So we generally have a very good sense of how tokenomics works, how fundraising looks like, how do we do an OTC and things like that. So we don't need other people to teach us, right? So I think when you combine those two expertise together, then it becomes something really, really special. Given that I think we have a very, very small market, right? We have a very, very small market here. So you must set your eyesights, try to serve global market and not just Hong Kong market.
Right. So let's say we start out from a super solid and important foundation, which is talent, and you challenge a little bit the regulatory frameworks and the capital raising capacity and capability here of Hong Kong. Maybe if we take a more dynamic view and also in that context of talking about IPOs and IPOs as maybe a more newer but more and more legitimate pathway for scaling even in the Web3 industry. Tell us a little bit more. What are you seeing? Are IPOs really becoming a go-to opportunity for capital raising for Web3 companies globally? Let's start globally first. And I mean, we had some impressive ones this year. I mean, you talked about Circle. What's your take on it?
This is the most interesting phenomenon. I've talked about this in many, many podcasts or interviews over the last 3 to 5 years. I think one of the most important trends that I think everyone need to have in mind, and especially I think that goes back to my statement in the beginning, is the second half. We are going to have probably 100 public company. I think right now, if you count a DAT, probably more than that, right? If you exclude the DAT, I believe we will have 100 public company within the next probably 3 years globally. Including DAT, I don't know, that number could be 200 or 300 in terms of public vehicle. And whenever that happens, it definitely normalizes the industry. It creates a platform for you to raise new capital. It creates a platform for you to do M&A as well, which is really important. I think, the Animoca story, if you guys, familiar with it, I was the early lead advisor of Animoca. Started because they're a public company. They use the public company share to acquire other companies. That's how Sandbox came around. So whenever you're given a platform like that, I think startup can really be creative and no longer that limited to just, the crypto pool of, just what a couple of VCs have to say. So I think that overall is very, very, a lot of things going to happen, but also, I think there's also a lot of consolidation is going to happen. I don't think most of this DAT could survive, right? Probably half of the DAT, smaller DAT will get bought by, the bigger DAT at a discounted MNF. Probably some of the bigger DAT will probably start to pivot to also become an operational platform, because what you have right now is a couple $100 million, let's say $500 million of real assets, basically a real NAV. And what you want to do, you can use that to buy other companies. An entrepreneur like myself, if you give me the right price, I'm very happy to get consolidated because your market cap is real to a certain degree. And so they can roll up a lot of company that maybe is making 5 million, 10 million, 7 million revenue, but might not be able to IPO on their own. But it's a valuable, very valuable company. So I think a lot of this company will get absorbed to become bigger groups. And I think that is pretty much what happens in the early days whenever a new industry develops. You think about China back in the days in 90s, like Hong Kong stock market. There's this company called Beijing Holdings, which is one of the very first big Chinese state-owned enterprise that become public. There's no such company. The company was a merger of 6 other groups of companies and become a bigger platform. And I think that's exactly what's going to happen in crypto stock market within the next few years. That means a lot of my friends going to become public company chairman and maybe get richer and get more stressful. But also that creates opportunity for you to do a lot of the other transactions overall with it. So there is, the way I kind of look at it is liquidity. If you open up for a new cohort, new target audience, is always good. There's going to be phenomenon that you don't like, a lot of financial engineering, like the DATs in general. But overall, I think it's definitely a great thing.
And I'm sure a lot of your portfolio companies are coming also with that question to you. Is there some general advice or like rule of thumb or so that you would advise crypto founders in terms of thinking about IPOs, stage, geography, whatever? What is it that you really put forward and tell them, okay, in terms of a decision matrix, crypto native funding versus IPO?
I think the way I kind of look at it is equity is a long game in general. Like crypto is still superior in terms of giving you liquidity as early stage startup for sure. If you look at like some of this trading volume of the tokens, many of them are way better than like what we see in Hong Kong stock market. Like, most of them very, very dry. Most of them is like a million Hong Kong dollar in trading volume. I'm not trying to say this is superior to tokens at all. I think it suits different goals, right? If your network or your product require a lot of people's like crowd participation and composability to help you build a network, then voila, you should add a token. You should put things on that. You should incentivize everybody because that's how you're going to build a product. But if your product, like for example, like Aspen will never probably issue a token because it's a business that actually is a very simple fintech business that generate cash flows, that does certain things, and we don't need the token to perform a role in this growth plans or in this ecosystem or keep ourselves honest or anything. It's a centralized product. So in that sense, IPO is the way we should go, and we should think long term. We should really think about getting my audit right, don't do things that we should, that where my legal firms would not sign off my materials if I were about to file for it. So basically just try to do all the right things. And I think what I saw majority of the time is most of the founder in the market, the hurdle they usually face is that sometimes they're greedy. They want the best of both. Last month, they're like, launching token is good. Liquidity dried up. Next month, they was like all of a sudden become a stock market guy. So I think that is in your plan change across, right? So I think as long as you have a plan and stick to your plan, that's probably going to work out.
Yeah, and so again, then forward looking for Hong Kong as one of the premier IPO hubs globally, what's your take on it? How fast will Hong Kong move in terms of the regulatory framework to enable that? And what is for you? What do you think is the biggest missing piece, or would be the biggest enabler actually to catapult that?
I think this is a very tricky question because I think if you look at the Hong Kong as an IPO market, obviously this year we're number one in terms of fundraise so far. Like and
again, 2019 I think was when SenseTime did their listing.
Exactly, and obviously our government loved to throw out those matrix and say we're number one, baby. And we raised a lot of money. Yes, I think 54 company from China in first half this year alone, and then towards the end of the year, we definitely be end the year with number one, given that now it's in October. So I think it's a testament that given the right company and the right quality, a lot of people will be interested. The funny thing is, let me give you this funny story, is like in the last probably 2-3 weeks or so, I have more than 3 or 4 really big US based crypto VCs asked me if I can help get them allocation for Unitree, the robotic company from China. So I do think there is a certain level of attractiveness if you have the right target. And it doesn't matter the region, it doesn't matter the industry or even their nature. They're supposed to be a token investor, and now they want to buy Chinese almost like state-owned enterprise, right? To semi-state-owned enterprise to a certain degree. So I think it's all about quality and target, where the company is going to go. Given that, I think the first cohort of company, some of the biggest one, of course, I think in crypto, they will aim for America. Because if you look at our industry profile, that we probably have 10 companies that makes $1 billion in revenue a year. Most of them are exchanges, like the Upbit of the world, the OKX of the world, etc. We have probably, I would say 30 to 50 companies, max, that makes 100 million quality revenue a year, like Flybox and, stuff like that. We have maybe about another 3 to 5 times of that number, probably like 100 to 300 company that makes about 30 million quality revenue a year, 30 million. And then we probably have, I would say, 1,000 company that makes $10 million a year. But the interesting thing is, out of all these companies, half of them are trading companies. That means they're doing structured product, they're offering you their market makers, they trade against you and stuff like that. That means half of this company are not IPOable, right? Like they will not have multiples in the market. Goldman is not going to be excited to underwrite them. And as a retail investor, you're not going to be excited to hold them either. They're great business, A lot of them are friends. They're going to make money. They're going to hold on to their crypto. They're going to do well, but it's not a company that should go public. So that means actually the target is quite limited if you look at that range. And you kind of already knew that in the next 3-5 years, who are the names that like highly have a high chance, like Animoca being one, obviously, right? So then the key is you map them and then you see who is actually seeing Hong Kong as the primary market. The only one I can think of at this point is Hashkey, which is a great business, or maybe there will be other business down the road. But as an industry practitioner, I always feel like it doesn't matter is it Hong Kong or US at this point, because US winning is Hong Kong winning too. You look at Circle, that's the same thing, right? Like Round Dollar, which is a local startup, if you guys know Rita, they struggled to raise money for a very long period of time. Until Circle did very, very well, they're 3 times oversubscribed, right? And I joke that she's like, for a period of time, the hottest girl in town, everyone wanted to chase, right? And so US doing well, our industry peer doing well in US is also company doing well in Hong Kong and Asia. So I think the line has really, really blurred in capital market these days.
Exciting. And to round up your very bold statement from the beginning about bracing for the second half, what is the one big shift in Web3 that you are most excited about?
I think the distribution channel we're going to have within the next 3 to 5 years is something that we did not have in the first half of the industry. For example, let me define what's distribution. We have published many apps on App Store. The App Store policies in history is never really that clear. When you have crypto element, when you have wallet, when you have tokens, is token kind of, should they take 30% of the token or not? Things like that. Until very, very, very recently. For example, historically, a lot of the fintech platforms don't want anything to do with crypto. And now you saw ads about Futu trying to ask you to buy Avalanche in the metro, which is amazing, to be honest, because there are 5 million users in Hong Kong. If they convert 20%, Hong Kong currently only has about 400, 500, I would say, token holder max. So that means one company could triple the size of Hong Kong's distributions, right? And I was in Japan talking to telcos, and my team is talking to telcos, and I was just now in Korea talking to chaebols and etc. They're all going to create this distribution funnel that historically that was like never ours. And so it's always like we fighting our fight, talking to KOLs, can you help me show this and yap this? And, it's not really inspiring, I would say. And I think there's now a new mechanic we can possibly use. Keywords are now possible for us to target the users using Google AdSense, which is also not possible because Google AdSense and Meta Ads blocked all the crypto keywords for a very long time. And now it's possible. But I think also it's the biggest challenge as well. Because that also means every single mainstream company now can come and compete. That means your competitor right now, if you're a trading platform, is no longer me or Hashkey or Animoca. Like Hashkey need to worry about their business because now Futu is going to come. And Futu has probably paid, if you assume each of the CAC of each paid user and deposit user is, let's say $200 or $150. I think they give you like one Tesla or one Amazon, whatever, when you open the Star account. That means they pay $150 per CAC for 5 million users. So every competitor in crypto right now, you need to think about what is my creative way to grow and compete with this incumbents. And I had this exact same conversation the last 2 days in Korea, taking my team to meet all the chaebols. They are praising us for 50% of you guys are valid, you guys did well, I really like your product, everything. They're praising you for 50%, but out of 50%, they're also kind of threatening you to go into partnership with them because they're like, yeah, we're way bigger than you guys. We can crush you easily, right? You don't have what we got. So I think that's what I mean by the statement is, second half is going to be very, very exciting. There's opportunity to create great things, but also that means we've left this kindergarten, stage of the industry, and now we got to fight with bigger boys and bigger guys. And these bigger guys, they're bullies too, right? It will make us stronger, but at the same time, they could be bullies too. So if you want to do well, if you want to win in the next 3-5 years, we got to bring our A game. We got to step up.
I personally can't wait to be in the second part of the industry, and I wanted to thank you very much for covering a lot of ground and topic here, talking about communities, analytics, IPOs, global bridges. Thank you. And I would like to welcome you back here on stage. I think it would be wonderful to see how things play out. But for this time, just want to say thank you for tuning into Web3 Harbour Smart Contact series, and we'll see you next time.
Thank you very much.